Hey guys, Toby Mathis here, and I'm joined by Ryan Gibson. First off, welcome.
Thanks for having me.
And Ryan is over at Spartan, and they do a very unique type of real estate investing, something you've probably heard about, and I'll let him explain it. But I want to set the table. Right now, we are sitting here in an economy where you have people forecasting doom and gloom in the housing market, like, oh my gosh, there's so much inventory, there's 500,000 properties, we're up to 4 months of inventory. And then you have things like the Case-Shiller report comes out yesterday and says home prices year over year are up 2.7%. And some people are like, well, that's horrible. But again, there's all these folks that have been predicting the downfall of the housing market, and they're continuing to be frustrated. So Ryan here, what are you guys up to? About 750 million of property?
Over 800 million with 100 million under contract right now.
Yeah. And Ryan's in a very niche area, so I'll let him explain that. But what are you seeing in the housing market before we get into what you do?
Yeah, so I mean, for the last 3 years, people have not been transacting like they have been. We've seen the lowest inventory or the lowest sales volume of housing over the last...
in the toilet, yeah.
Yeah, it's been the lowest trading since 1997. So we actually are seeing a very low point in home sale volume, which means people aren't moving as much, right? People are kind of staying where they are, and they're not actually buying new houses. The Multifamily Association recently put out a stat that the renewal rates of multifamily leases is the highest, the highest it's ever been, at over 85%. So there's a lot of people just kind of staying put and staying in their fixed rate loans and not selling their house.
Why would they? They're sitting on a ton of equity, and they have really low interest rates. And the sub 2 people, by the way, are taking this one, and they're like, yeah, we want that mortgage. I'll take it over for you. But unless that's you, you're probably sitting here going, I would not sell my house if I have a 3% mortgage if I'm going to have to renew it at 7%. It just doesn't make economic sense, so they stay in the home.
And a lot of people are renovating more now too, because they're not leaving.
I saw forecasts, again, Home Depot and those guys saying, hey, there's going to be more home renovation. But at the end of the day, people aren't moving around as much, and they're confusing the fact that people need to stay with the market is bad. And it's kind of the opposite. You have people that don't have to sell because they are sitting on a ton of equity. This is very different than 2007 and 8, where people were underwater in their mortgages. Here, the average American has 200,000 plus of equity. They're not forced to sell, and they have these fixed rate mortgages that over 8% or 80% or
95%, according to Bank of America, 95% of Americans have a fixed rate mortgage.
And do you know the percentage? I think it's 80% or something is below 4% or something
really
ridiculous.
Yeah, that doesn't surprise me.
I'm guessing on that. You guys can Google it. And go to ChatGPT.
Yeah, exactly.
That's right. But it's a really low interest rate. So a lot of people are just like, maybe if interest rates start to slow, you see some more volume. But average inventory over history is about 6 months. So we're not hitting that. And the people that are like, oh my gosh, it is now a buyer's market.
Yeah, barely.
Yeah, they're missing what's actually happening. And now it becomes very difficult. And there's a chart that I like to use, which is the fair market value of homes compared to the rental market. And what happened in 2007 and 8 and 9 is the value of the homes were so high, but the rental value, what a investor will pay you for the house, there was a huge gap in it. And so all these people are sitting on a house, and now they have to sell it because they have a adjustable rate mortgage, they're underwater, whatever. And here come the investors. The banks, like BlackRock came in, all of us investors, we were buying everything we could get our hands on. But the $1 million house you have isn't a $1 million house to an investor. It's 250, 300,000. Those numbers are really out of whack right now. But it's a different marketplace. It means it's almost like those rents have to be forced up, but they've been so kind of steady Eddie.
Yeah.
They are not going up, and the home values are continuing so something's going to give.
Something's going to give, yeah.
It's an interesting market that maybe if they lower interest rates, you see a bunch of people dumping houses, but they're not. Again, it's not 2007 where they're forced to sell and they're foreclosing and there's deeds in lieu of foreclosure. What you're going to see is people, hey, I thought I was going to make 230. I'm only going to make 210. Right? Yeah, it's like, I just lived that. I just sold a house where it had gone up considerably since in the last 5 years, shockingly. And I was like, I think I'll dump it. It was too much to carry, and the rents weren't really justifying its existence. And yeah, we offered at a really high number, and within 2 weeks sold it at a slightly lower number. And of course, on a stat, they say, see, you're lowering your price, so it's a buyer's market. But no, it's not where we're at. Explain your niche and how this plays into it.
Yeah, so we're self-storage investors. So we've been as self-storage investors for over a decade now. And we focus on markets that have high population growth, net migration, good trends of people moving to a market. And we'll go buy mom and pop operators. We'll buy a whole bunch of them. And then we're aggregating that into a big portfolio where we can benefit from transitioning a mom and pop operator into professional management.
So self-storage, just make sure we're talking about it. It's like the public storage, right? That's the big
right.
guys.
Yeah.
It's no toilets, no tenants living there. They're just dropping their stuff off, and they're visiting it once in a while.
Yes, and no evictions.
No evictions.
We put a lien on everybody's belongings, and if you don't pay after 30 days, we could sell all your stuff and get our unit right back. Yeah, so I mean, I think that's one of the most compelling things about storage is number one, we can automate, so people don't even have to talk to anybody. They don't have to have leasing agents or things like that at the property all the time. And we do have a call center and people that lease units, but you can rent a unit online 24 hours a day. You can talk to a call center. You can scan a QR code, move yourself in. And if you don't pay after 30 days, we can lien your belongings and auction off your stuff and get all our money back.
So you're not tied up in court dealing with the tenant that says you're, hey, you didn't give me enough notice, or this is unfair, you're discriminating, or whatever else. You're not tied up in all that stuff.
We're not only that, but when we go into the unit, it's a dustpan and a broom to move out the tenant. So we don't have to deal with, a trashed, pissed off tenant, right?
Now I have hundreds of units of single family, and it's all like in multifamily, we have apartment buildings and commercial. Yes, that is actually a thing. The turn, as they call it, the turn of a unit. So
it's interesting. I had the chance to sit down with the guy that built the very first self-storage in the state of Washington in 1972. And I said, what's changed over the last 50 years? And because he's still in the business, he's 84 years old, started a big company, 650 storage facilities. And he said, nothing's really changed. Customer service is still a thing. And he built the first ones in Washington. He had 16 facilities in the whole state at one point.
Really?
And he was worried at that time that he had overbuilt, right? He was like, oh man, I think, I can't fill up the next one that I build.
That's like having 16 McDonald's in the state. Like, I don't know if I could add more.
Yeah. And it's funny because we talk about the same thing today. Is it overbuilt or are there too many? And we can speak to that, but
it's a ratio, isn't it?
Yeah, I mean, Americans use 6 square feet per person.
That's it. Like when I say a ratio, it means you can calculate. There's 100,000 people that live in this area. Here's how much storage space they need. You look at it and say, here's how much storage space is built. Here's what the market will bear.
Subtract it out.
Yeah. Is it that easy?
It's a rough wag, right? I mean, you still want to go and mystery shop the market. You want a well-located site with good drive-by traffic. You still want to have good population growth, good economics with the demographics. But yeah, at the end of the day, you can pretty much go in and calculate the demand, and there's people out there that do demand studies. But I thought what was interesting about him was he said, the reason why I got into self-storage, built that very first one, was because we get the same rents per square foot as multifamily, but we are a third the cost to build and operate.
I'm going to dump all my, I'm just kidding. I have both, but let's talk about this as an investment opportunity, right? So a lot of the folks that watch this channel, my channel, which by the way, give comments on what you think of what Ryan has said thus far. Do talk, as we'll forward it, and
Good,
Ryan will go
and
back and he'll answer. But a lot of people want to get into these types of investments. And I'm going to do a cautionary tale, right?
Yep.
It seems in self-storage that there's some very big players, and then there's the little guys that come in, and the little guys get squished. The middle guys seem to get eaten. And I would say it's a good thing to get eaten by the big guy. Like if there's a shark fly, here's the swish. You want to be an attractive, lots of chum. This is really tasty. Come in and gobble me up, because that's your exit, right?
That's exactly right. Yeah, if you actually look back about 10 years, you would see operators like SureGuard. You would see operators like Simply Self Storage, Life Storage, Uncle Bob's. Well, guess what? Life Storage gobbled up Uncle Bob's, and then Life Storage was then gobbled up by Extra Space. So it's a rapidly consolidating industry, and the mid-tier guys are all getting swallowed up by the big REITs, Public Storage, Extra Space, CubeSmart, and ultimately institutional funds that back those companies or back other companies.
All right, so let's talk about what Spartan does. I am a Spartan investor on multiple occasions. Like, there's different ways to invest in self-storage. It's not just, hey, I'm just going to go invest in a company that does self-storage. There's multiple ways to get involved. But what does Spartan do? Like, do a shameless plug and tell people why Spartan has been so successful.
Yeah, so I think that, we're the 30th largest operator of self-storage in the United States, and we have over 800 million of self-storage facilities. So I would say our experience doing lots of transactions, lots of storages, our economies of scale. We actually build self-storages, our own self-storages with our own construction company. We have our own property management company called Free Up Storage that operates over 61 sites. We have over 75 facilities nationwide. And I would just say our experience going into different markets and getting our economies of scale, we've actually been able to find really great properties, attract investors to fund them and invest with us. And then we've been able to operate successfully. We've had 16 full cycle exits that have all produced a positive return. And I would just say our scale and our team are really what make the difference.
Did it start off easy?
No.
Again, because there's people out there and they're like, I could do this. I've seen the crappy RV storage place down the road that looks like they barely are there. Like, we've all seen them.
Yep.
Right. It needs a little tender loving care, but somehow those things cash flow, right? But they're thinking, I could do that.
Yeah. So we got into the industry. We flew around the country. We went to all the conferences, things like that. We networked with all the big players in the space. It took us 2 years to find and buy our first one. And not because we weren't motivated or trying hard, but we had a very specific investment criteria. We said no a lot. We narrowed down what we were looking for. If you want to go buy a self-storage facility, just go to LoopNet and look for one. You can buy one, right? And you can buy some garbage. And then you'll realize that it doesn't produce enough income, that will justify a call center, it won't justify the revenue management. And now you have a job, and it's a pretty miserable job managing your storage property, right? So I would say be really defined in what you want to do. And I think that's really fueled our success. That's why we were able to grow so fast and be one of the fastest growing companies on the Inc. 500 is because we had a strategic plan and a vision for exactly the type of facility that we were looking for that made sense with our acquisition strategy.
And I'll say this because as an investor, there's different types of projects you want to be involved in. And I would say in self-storage, and correct me if I'm wrong, it seems like they're falling in 3 categories. It seems like you could buy existing architecture, like existing units, storage, and you fix them up and run them more efficiently because somebody's not renting out all the units, they got all their cousins and everybody else storing stuff there, or maybe they just haven't fixed it up. There's the existing units, there's building your own units.
Right.
And then there's just being the lender and saying, hey, I want to back this.
Yeah.
Am I missing any of them?
One more, I would say you could buy an existing that has an expansion opportunity. So you could buy property that has additional units to add on. I would say that market's kind of dead right now because it's hard to justify expansions in a lot of markets because the rent or the construction costs, the borrowing costs are super high. But I would say like markets that have a ton of demand and really strong rents you can find, little niche markets around the country where you can get the rents that you want and build ground up. And I would say right now, our focus has been not buying the C and B class properties. And the reason why is because when people have options, when the market softens a little bit, where do they go? They go to the A because the A has to discount their inventory and now the B has to discount the C and it gets harder and harder and harder. So it's easier to attract investors to Class A. And see, you're probably wondering, okay, well, how do you add value to a Class A facility? Well, some of these mom and pop operators are not charging tenant insurance. So we just bought a property today in Nebraska, Lincoln, Nebraska, 2 properties, and the seller was not charging any tenant insurance. And what that means is the 800 units that they have, well, let's say it's 500 units for math, $13 a unit is what we can charge for tenant insurance on day one. And we get 70% of that income over 500 units.
And so that's 8,000 or what is that?
Yeah, it's like 6,000 or 7. I mean, I'm not math in public. It's not my strong
13
suit.
times 800, that would be $1,040 or something like that.
Yeah, I mean,
$10,400.
$10,000. Yeah, $10,400 a month times 12 divided by
Boom.
0.06, you've just added $1.5 million of value to that property. And we find properties
You
like
just
this.
lost a bunch of people?
I know.
What he just did is the cap calculation.
That's right.
And here's a simple rule, guys. Ready? If you're buying a house residentially, you're buying on comp. Well, what are the square footages in that local? That's what your realtor's going to pitch you on. Investors buy on cap, which is the cap rate, what it's returning. And so what he just did in his head is what you get a little piece of paper out, and it's really simple. It's net operating income divided by the cap rate equals the fair market value. But any changes in that operating income, anything that you bring to the bottom line, divide it by the cap rate, and your good realtor in a local area will know what the cap rate is. And you could say, boom,
Yep.
I just made my property worth $1 million out of just thin air. Just whoosh.
Yeah, the thing that I like to say is for every $1 that you earn an additional income, you add $16 of value.
That's a good way to look at it.
Yeah, divided by 0.06, 1 divided by point. I hope I'm doing that math right.
Wow.
So if I charge an extra $13 a month and I get 70% of that, about $9, times that by 16, and that's how much value I've added in addition to the cash flow that we get. So
Wow.
there is massive opportunities. And in that market, 95% occupied market, the seller was below what everybody else is charging, not charging tenant insurance.
You
So we're
adjust
just
it.
going in and adjusting the rents. Yeah.
And that, ladies and gents, is why you deal with someone who actually knows this stuff, because what you don't know will usually come up and bite you in the tush. And what's interesting is a lot of the mom and pops are really happy
Yeah, they
not
love
with
it.
leaving that money on the table. And they're like, but I'm happy. I'm not selling boxes and tape, and I don't have an automated system. I don't do with them computer things. You know, we let people in and we have a key, you know.
That's exactly right.
And they're happy making this margin. And you could buy it based off of this margin and then make it this margin. And when you do that, you double the value. Sometimes, I shouldn't say double, but you're increasing significantly the value of the asset. And if you buy it right, especially if you're using, decent financing, you could be in and really like have huge returns. I've seen my clients and I've seen mine, and people do very, very well in storage. And I would believe, if I'm not mistaken, that it's one of the best asset classes in real estate, period. out
Yep.
there.
So the REITs just sent out a report recently, and self-storage is factually the best performing commercial real estate asset class, period. Over the last, however many years they've been measuring it, and that's because of life events. I always joke that people use storage because they have too much stuff, but if you actually ask people why they use self-storage, it's one of the 5 Ds, or I used to say 4 Ds, but now 5: death, divorce, displacement, downsizing, and diapers. I thought that, my story is, I thought it was really stupid that someone would use a self-storage facility when I got into it. And then I had a home renovation because my family was getting bigger, and I moved all my stuff into self-storage. And I put my stuff in there, and I'm thinking, oh, it's only gonna be 3 months for my renovation. It took me 12. And after about 5 months, the owner raised my rent 20%. And so I was like, I was kind of like angry at first, but then I was like, well, what am I gonna do? Everybody else is full.
Yep.
20% of $100 is $20. And if I get a truck and all that, and I move down there, it's gonna cost me, $200 of my time to move it into a new facility anyway. So that's what got my wheels turning. And I talked to the owner, and he's like, yeah, we just raise the rents and people don't really move out. And
Because what are they going to do?
Where are they gonna go?
Put it?
Yeah.
Maybe a competitor, but
they're full.
yeah.
Yeah, or charging more.
Or it's
Yeah.
a horrible facility because
Yeah.
it's run up by, you don't want to have your stuff there because they'll disappear. So I just had a friend and a client who ended up being his executor. And we ended up with the storage unit that we found in Washington. It was in
nice.
Vancouver.
Okay.
Stacked to the ceiling with just random stuff. And we were thinking of like the storage wars. We're going to go in there, we're going to roll it up, and there's going to be a
Gems.
Picasso, and then
Right.
it was just a bunch of crap.
Bunch of crap.
Yeah, just that he was like, but he didn't want to get rid of it.
Baby boomer or millennial, or who what was the
He would be a boomer.
boomer? Okay, so I think it's interesting to talk about because millennials are actually the largest generation that uses self-storage right now.
Really?
And when I got into the industry 10 years ago, the industry kept saying, who is going to be the replacement for the boomer? Will the millennial actually start using storage as much as boomers were? Because
Yes.
boomers were using self-storage the most. They've dropped off, millennials have taken over. And what's interesting is boomers use self-storage way differently than millennials do. Boomers had all the heirlooms.
Yep.
They had the floor to ceiling, packed self-storage. They have the china. They have all the things
That's
that they
what
wanted.
it was.
Yeah,
It was paintings and all this weird,
yeah.
bizarre.
There's no Picassos. Yeah.
And I was like, this has got to be valuable.
Nope.
No. What about this?
And the millennials, we don't want that stuff. But millennials are using storage entirely different. It's experience stuff. It's dirt bikes and mountain bikes and snow skis and snow tires and stand-up paddle boards because their apartments are so small.
It's so expensive. I was going to say, it's so expensive to rent a living space that you're like, okay, how about this? I rent 1,000 square feet.
Yeah.
And then I go get the cheaper. How much is it as a ratio? Like, is it like 1/10
Usually,
the cost or something?
well, I mean, per square foot, you're going to pay similar as your multifamily rent, but you can size it to exactly what you need, to like a 5x5, right? And you can stuff a bunch of stuff in
I'm
the
thinking
closet.
houses. Like if I'm buying a house.
You're buying a house, yeah, exactly.
And I'm like, oh my gosh, but I could rent a 500 square foot.
well, the average unit price is $90 a month,
Yeah, it's
right?
cheap.
So it's cheap. It's super cheap. Yeah.
He had a big one. It was like $300. It was
Yeah.
huge. I was like, I want that as my garage.
Yeah,
You
yeah.
know, but that's
Well,
what
you
he
can
was
rent from us in Vancouver.
I don't live in Vancouver, and we're getting rid of all that stuff. But it was we had to get a forklift. There was so much stuff.
Holy cow.
But it's always kind of shocking to me when I look at this, and now I'm realizing, I have my garage. I don't even park a car in it anymore. You're just putting stuff in there.
And 66% of our customers also have a garage. So it's like a crazy, 1 in 9 Americans uses a self-storage, and most of them have garages.
What about garage bands? Come on, you got to have a few.
I mean, there might be a garage band in there.
All right, so you guys are learning about, to me, this is like one of the hidden real estate strategies. And I'm always saying, hey, you want to diversify. I'm a big single family guy. Like that's just in my bones. I buy little houses all the time, and I still do some multi, but I've started adding years ago with you guys, the self-storage. And I'm kind of the opinion that it's a great asset to add into your real estate portfolio if you don't want to have all the ups and downs. It seems like it's pretty steady, Eddie. That's my experience. Is that?
Yeah. I mean, if you look back over even during the COVID timeframe, distressed real estate by asset class, self-storage is like almost no distress, no late payments on mortgages or no distress in the industry. And Credit IQ puts that report out.
All right, so then I'll make it easy for you guys. Go down in the comments. If you have a question for Ryan, write it in, and then we'll either send you a link where they can reach out to you guys, or somehow we'll respond to you somehow, some way. Get it in there. And if you just want to talk to Ryan and his team, just say, hey, I want to talk to Ryan. And we'll send you a link where you can go with there. There's absolutely no pressure on this. But if you want to learn about this stuff, you want to learn from a guy like this. I know Scott, your partner as well.
Yep.
And we watch them continue to grow. They're doing it the right way. They are the medium fish. Your number...
Yeah, number 36, exactly.
Number 36, which means everybody that's above that is looking at them going, I want to buy your stuff. Probably the top 10 are probably eating everybody else.
That's right.
But it means that you always have an exit, and you've done really well for our clients, and I really appreciate that. So if you guys can, like and subscribe, and reach out to Ryan to say, hey, Ryan, reach out, or any questions you have, we'll make sure it. Thank you for joining us.
Thanks for having me. Good to see you.